Welcome, dear traders. As usual, we start the day with a video review of the Asian trade. Yesterday, the US released its consumer price index. Wall Street's reaction was instant and rather negative. Asian stock markets also became volatile, and let's discuss the main highlights of the Asian session. The problem of galloping inflation arose when the US government decided to boost the economy with huge stimulus packages during the devastating coronavirus pandemic. Notably, it maintained its liquidity injections even after the pandemic eased. Almost all states did likewise. They allocated massive sums to revive the economies. In the case of the United States, its money supply belonged to such high levels that it may trigger a downfall or a recession. For this reason, central banks and analysts closely monitor inflation figures. Yesterday, the US unveiled its inflation report, and the reading turned out to be better than economists' gloomy forecasts. US inflation surged to a new four-decade high of 8.5% in March, logging the fastest annual pace since December 1981. Excluding food and energy, the so-called core CPI increased by 6.5%. Such figures once again showed the Fed the need to tighten monetary policy. The second-ranking Fed official, Lael Brainard, said yesterday that the regulator is determined to stick to an aggressive stance on monetary policy. After digesting macroeconomic reports, traders also took notice of a geological news. There are no positive shifts as Russia and Ukraine are reluctant to return to the negotiation table. So after a rise in early trading and the volatility caused by inflation figures, the main US stock indexes closed Tuesday session in the red. After a 7-day rally, US Treasuries also moved lower following the inflation report. However, by Tuesday evening today, government bonds resumed an upward movement. The US dollar is literally unstoppable. It's an 8-day rally, only strengthened amid Brainard's hawkish comments. However, the US dollar index slightly declined during the day due to falling government bond yields. A bit later, its quotes recovered to 100.30 points versus the main rivals. And today, in the Asian session, the US dollar is already trading at the level of 100.34. It's ready to reach new heights. The greenback is highly likely to continue its steady rise in the long term. Its major counterpart, the euro, was weakened by the French election. And now it's losing steam because of the conflict between the European Union and Russia, as well as the new sanctions. And today the US dollar is likely to move in the range of 100.20 and 100.55. So the US dollar is an undisputed leader against other currencies, while investors are assessing the situation with inflation and its consequences. The US dollar is approaching a new highs. Yesterday, the dollar-yen pair dropped slightly. The yen did not waste the time and managed to test the level of 124.90 twice. The world's second strongest economy has its own potential, like its national currency. However, as long as the Bank of Japan maintains a dovish stance, the Japanese currency has no chance to gain momentum. Asian stocks are growing today. At the moment of making the material for this video, the dollar-yen pair was trading at 100.35. In the daily range, the pair is moving from the resistance level of 126.31 to the support level of 125.32. The bearish sentiment prevails. The Aussie as well as the Australian economy have almost similar ups and downs to the United States and its currency. However, there are some differences. Australia is located quite far from Europe, but close enough to China. If geopolitical woes affect Australia only to a small extent, then Shanghai's lockdown is quite a serious problem. The country may incur significant financial losses due to drop in exports, volumes and supply disruptions. So it's not surprising that the consumer confidence index has been declining for the 5 months in a row, given the surge in inflation and expectations of rate increases. Apart from that, the East Coast has been hit by extremely flooding following multiple rounds of heavy rain. However, the situation is not so grim. The Australian economy and the Australian dollar usually benefit from rising commodity prices. Yesterday's jump in oil prices helped the Aussie return to 0.7490. Today, it was able to jump to 0.7469. Yet the Aussie gave way to a stronger US dollar. There are some nuances though. The pair is rather volatile. The Aussie has already fallen from a high of 0.7469 to 0.7425, and shortly after it began to grow again. At the time of preparing material for this video, the price dropped to the level of 0.7434. Oil prices have advanced to $100 threshold, and they kept growing, and it's quite bullish for the Aussie. However, the AUD/USD pair is moving downward in the range of 0.7427 and 0.7474. And that's all for now. Feel free to ask your questions down below, subscribe to our channel, and be aware of the latest market news. See you soon!